Hello and welcome to Business Incorporated. Coming up in the next 25 minutes, the Ghanaian government set a target of 2.8% growth in gross domestic products for 2024. The World Bank warns that Kenya might lose up to 7.25% of its economic output by 2050 if it doesn't take decisive steps to adapt to climate change. Oil prices edge higher today, a day after slumping 5%, but still set for a weekly loss. Hello, welcome to the program. I'm Ladi Williams. Let's kick off with markets now. First things first with the African continent. Now we'll see markets we track here. The NGX still staying in positive territory, 0.18%, a bigger, more convincing move at intraday compared to yesterday, while the GSC index, that's up 0.26%. All the markets we track now see in North Africa, the EGX 30 is also up 1.02% to close yesterday, and we'll see Kenya closing down negative marginal 0.07% yesterday. Let's take it over to the Middle East now. It's mostly positive sentiment in the UAE. We see the Abu Dhabi and Dubai index both in different positions there. Dubai index down 0.02%. Other markets we track, Saudi Arabia and Qatari index closed yesterday, both positive, 0.54% and 0.42% in positive territory. Let's take it on to Europe now. A ruling by Germany's highest court has left a 60 billion euro hole in the government's climate funding. Joining me now is Chiponda Chimbelu from Berlin to bring us up to date. Great to have you, Chip. So can you tell us what happened?
Ladi, thank you for having me. Well, this whole case is about an unusual budgetary maneuver by Germany's ruling coalition. The government wanted to take untapped emergency funds that were meant for fighting the effects of the pandemic and use them in what it calls the Climate and Transformation Fund. And this part of government spending was supposed to be separate from the regular state budget. The Climate and Transformation Fund was supposed to support green investments and innovation. And unfortunately, it didn't have the backing of opposition lawmakers. They said the government's fiscal maneuver to reallocate the emergency fund from the pandemic was unconstitutional, and it could set a precedent for Germany's financing of future crises. And they took their case to the Constitutional Court, which, of course, sided with their arguments this week.
So that's definitely a big hole, but what happens now?
Well, the government's Climate and Transformation Fund is 60 billion euros short, and the government will have to find the money to fund it elsewhere. Next week, the Bundestag, the parliament, will vote on the government's budget. If that is approved, regular government spending for next year will be locked in, and the government will have little to no flexibility to plug the gap left by the court's ruling. The Climate and Transformation Fund was central to the coalition's green goals, and now its future is uncertain. Germany has already been struggling to meet its climate goals. After Russia invaded Ukraine last year, Germany had to fire up coal plants as the country rushed to find alternatives to cheap natural gas, which also happens to be less damaging to the environment than coal. If Germany wants to stick to its climate goals, it will have to find alternative funding, and government financing, of course, is overstretched with increased military spending and, of course, trying to support Ukraine in its effort to defend itself against Russia. And of course, the German economy is also lagging behind its European partners, so the timing of this ruling couldn't be worse.
Yeah, quite interesting, but what can we expect from the markets in Europe today?
Well, Ladi, European stocks are expected to trade higher today, and investors will be keeping an eye on news from Frankfurt, where top bankers and fiscal policy makers are meeting at the yearly European Banking Congress. The main topic there will be how long the high interest rate environment in Europe should remain, given the continent's deteriorating economy. So there's going to be a speech by European Central Bank President Christine Lagarde, and so we'll be watching that, of course, and markets will also be looking out for data on the Eurozone's consumer prices.
All All right, thank you so much, Chip. Definitely be looking out for what happens with rates going forward. It's always been about higher for longer rates going forward. Thank you so much, Chip, right there in Berlin. All right, so next conversation now. See, entrepreneurship is pivotal to Nigeria's growth and Africa at large, with micro, small, and medium enterprises accounting for about 49.8% of GDP and 85% of total industrial employment right here in Nigeria. Joining us to discuss ways to promote entrepreneurship is Folani Duale, founder, CEO, Mentor Intro Africa, joining me via Zoom. Great to have you on the show.
Hi, Ladi. Thank you for having me. Thank you very much.
Fantastic. So paint a picture now about the role and impact of entrepreneurship in economic development right here in Nigeria and Africa at large.
So I normally say that entrepreneurship plays a very vital role in economic development in Africa. As a small startup or a medium, an MSME, you might think you're just setting up a business, to make some money and take care of your family, but essentially you are actually doing a lot of things for your local community, your state, the country, and Africa as a continent. You talk about job creation. Across Africa right now, South Africa is topping the chart with about 35.5% of unemployment. Nigeria is following closely with 33.3%, and we have Gabon at about 22.2%. By setting up a business, you're definitely bringing down the rate of unemployment in the African continent. You talk about infrastructural development, you talk about attracting FDIs, generally when it helps them diversify their investments from just equity to or fixed income instruments to investing in businesses and startups. So this definitely gives us a better outlook in the global scene. So those are some of the reasons, those are some of the impacts that we have, that entrepreneurship has on the economic development on the African continent.
Looking at our unemployment rates, we know that new methodology by the MBS has brought it down to about less than
4.1%.
Yeah, about. Well, I guess we're still sticking to the older
reality.
the older number for reality's sake. But looking at things right now, would you say entrepreneurs are really pushing the economies at this time, knowing fully well that they're battling a lot of macro headwinds right now, from currency devaluation and inflation, and squeeze incomes with households. How do you think they're faring, right now in 2023, and what are you seeing for 2024?
To be honest, there are a lot of challenges, like you said. I mean, enormous challenges, going from double digits. I mean, unable to get financing, to, like you said, fluctuating policies here and there. But I think, we're hopeful that because in Africa as a continent, we're quite ballsy. People would continue to go into different businesses. People will continue to set up businesses, even with the challenging restrictions or the challenging economy that we face as an African continent. I still see or foresee that Africans will continue to set up new businesses. There will be startups emerging all over the African continent. I mean, some challenges that we face that I think is a major one is the lack of talent, the lack of mentorship for entrepreneurs that are just setting up. So, but I just think that entrepreneurs will continue to be ballsy and set up more businesses across the African continent.
And I'm sure there are quite a number of people out there, maybe in paid employment right now, and might be looking at going solo, becoming an entrepreneur, at this time. What would you say to such a person, trying to get into this market, seeing how difficult the terrain is right now?
Okay, so I'll say, first of all, obviously your passion is quite important, because that's one thing that will keep you going. Being resilient, regardless of what the economy says, you have to be. But very importantly, I'd say you have to have people that you look up to. Try to find people who have walked the path. try to find people that you can get some sort of support from. I mean, we can't underestimate the importance of mentorship. I say that again, it is so important in the entrepreneurship journey. You need to have people who have walked your path, people who can keep you accountable on your goals, people who can plug you into whatever strategies you need to, address the complexities of starting a business and growing a business and keeping it running on the African continent, regardless of anything. Thankfully, there are a lot of virtual platforms, there are a lot of mentorship platforms you have today, that can connect you with different mentors to help you grow your business.
So take for instance, I'm looking for a mentor at this time, and I can't maybe find one to physically, talk to and say, be my mentor. You're saying there are platforms where I could get mentors?
Yes, there are platforms, several actually. There's Mentor Intro Africa, the one we run. Mentor Intro Africa it connects you with experts across different industries, ranging from industries like health and wellness to finance to real estate. If you're in beauty and style, you find the mentor there. If you're in governance, you can find if you want to go into governance, you can find the mentor in governance. If you want to go into any industry, to be honest, any kind of entrepreneurship industry, Mentor Intro Africa is a virtual platform that connects you to an expert. Just helping you out, sound like a soundboard, helps you, takes you to the next level of your business, helps you settle in your business, whatever difficulties you're facing, you're able to talk to them about it because they have walked that path. They help you minimize the mistakes you would generally make, when you go on the entrepreneurship journey. Because sometimes, entrepreneurship can be lonely, to be honest. Access to mentorship too can be quite difficult. So we have set up this virtual platform to help you connect with experts across the industry to take your businesses to the next level.
And what if I want AI to be my mentor? Is that possible?
Anyway, nothing is impossible.
Right.
It is possible.
It's all about AI right now. Thank you so much. It was great to have your perspective. Folani Dwale, founder, CEO, Mentor Intro Africa. Thank you.
Thank you very much, Ladi. Thank you.
All right, now let's get a sense of what's happening with U.S. markets. See, stock futures rose slightly today as investors look to keep this month's gains going. S&P 500 futures advanced about 0.25%, 0.28. So when we took the numbers, S&P 500 futures 0.24% in the green, and we see the Nasdaq there, the laggard right there for the futures market, marginally up about 0.07%. Gap shares leaped about 17% after the company posted better than expected results for the third quarter. Electric vehicle charging network ChargePoint, that's slid about 25% after announcing a shakeup in its C-suite and cutting its forecast for third quarter revenue. All right, we'll take a break now. When we come back, more stories on the African continent. Just stay with us. Welcome back. Now to our next conversation. See, the EIU in its Africa Outlook 2024 report says African nations will feel the financial squeeze created by excessive debt and a heavy debt repayment burden in 2024, which will weigh on economic growth and stability in some countries. Joining us now is Ibukun Moyeni, a sub-Saharan Africa economist at Vetiver Research, joining me via Zoom. Great to have you on the show. Good afternoon.
Good afternoon. Thanks for having me.
So what do you make of this report by the EIU?
Basically, when you look at African currencies have been faced with a lot of challenges in recent years. One of which is elevated oil prices, which spiked just following the Russian invasion of Ukraine. But in 2023, even when that risk has somewhat subsided, and we've seen commodity price change ease, the most recent or the still lingering factor is actually high interest rates. So in the US, for instance, interest rates have been rising since end of 2021, and we have seen interest rates rise significantly in the US. And what this does is this reduces investors' sentiment towards emerging market assets. So when you see more attractive interest rates in a safe environment like the US, you find out that a lot of investors will pack their funds from emerging markets and then move to the US. And we also note that most of these African economies are also dependent on dollar, right? A study by the IMF showed that a 1% depreciation in African currencies leads to a 0.2% increase in inflation in African economies. And what that implies is that as a result of this elevated risk-off sentiment, a lot of these currencies are actually weakening. And we also know that there's actually a weak fundamental when you look at the product and export capacity of these economies. For some of these economies also, we've seen excessive money printing, which particularly led to currency issues in Zimbabwe. We've also seen how excessive money printing has actually led to increased parallel market rates in Nigeria. And what that means is that a lot of these economies have to watch how money supply grows and ensure that reserves grows in tandem. And what we've seen is that a lot of these economies grow their money supply, they print a lot of money, but yet production does not increase. And as a result, that leads to a decline in reserves. And when it's time to actually repay those debts, they end up defaulting. So as a result, that's why you are seeing this very bearish outlook as regards SSA currencies of Africa as a whole. So we think that if countries can actually focus more on productive capacity, how can they look at their import bill and find a way to find alternative sources? For instance, if you discover that services import or services is taking a huge chunk of your FX, you can look at how can you improve your domestic health and educational sector so that you can actually substitute that and make it more suitable for development.
And the report also forecasts a double-digit drop for the Naira. What do you think can be done to avert this?
So for the Naira, looking at the fundamentals, really, looking at trade initially, looking at the trade indicators, there are some reasons to cheer. Why? Because following subsidy removal, imports dropped by about 7%, oil imports particularly, dropped by 7%, and that led to a decline of about 62% in overall imports. But we did not see this lead to any appreciable increase in improvement in exchange rate, because for Nigeria is battling with excess money supply. And when you combine the excess money supply with our low reserve, also with the fact that the net reserve is much lower than we think, that actually paints a very bearish picture for the Naira. And of course, we've seen measures in recent times to try and stem the slide in the Naira. However, we think that that measure should actually focus more on money supply, beginning with the ways and means advances. We understand that there was a move to securitize ways and means advances, but what we've seen in paper terms is basically a restructuring that could actually make the fiscal outlook for the short term to be better, such that the government doesn't really have to pay interest on ways and means for a while, or pay the principal, which is there was a moratorium basically following the securitization of ways and means. But in reality, that money is still in circulation, and if that money is still in circulation, if interest rates are not high enough to absorb it, or there are no direct measures to ensure that money is repaid, there will be a lot of excess cash chasing the Naira, and that's why we think that if past securitization mechanism should be put in place to ensure that that 23 trillion is put out of circulation, right? And when we are seeing a devalued exchange rate, which actually helps our export receipts, what happens is once you devalue your currency, you can actually earn much more in your local currency. But looking at the Nigerian Naira, they also have to monitor the fact that the excess FAC inflows needs to be properly monitored, such that increases in FAC inflow should be geared towards productive activities. Else, it could actually further increase in money supply. We recently witnessed a 2.2 trillion supplementary budget, which also adds to the money supply once that money is raised. And all these factors combined shows that measures need to be put in place to actually reduce the growth in ways and means advances or in money supply. And once that is done, we could actually share the funds we have into productive capacity, expand our productive base, refine crude oil. We also note that if Nigeria can actually produce more oil than can actually produce more oil than its quota, because if it finds that oil domestically, the quota will only affect its exports.
Right.
But in the case whereby we are not seeing that traction in production, right, the outlook for the naira may not be that great. But we think that some measures are currently being taken, and if those measures are further consolidated by further fiscal measures, we think that would support a recovery in the value of the naira.
Yeah, we're definitely looking forward to that recovery. But looking at the report in general, are there any bright spots?
So basically, when Nigeria is still a great economy, when you look at the prospects, right? You look at ICT, you look at finance. Finance, for instance, we have a lot of the tele density in Nigeria is quite high. A lot of people have access to phones, but not a lot of people have access to financial services, right? And if you can latch in on the telecom sector to boost financial access, that could actually provide low-hanging fruit for the Nigerian economy. If you look at the fiscal side, revenue measures, right? We actually applaud the measures of the fiscal committee in trying to mobilize tax revenue by essentially looking at what are the areas that have not been properly taxed, and how do we alleviate the low-income segment from excessive taxation. So we think that all these measures are important to put in place sustainable growth in both revenue and in external reserves. We think our external reserves is actually facing a lot of load when you look at when you look at the fact that reserves are falling to the lows of 2021, and we think that overall, if Nigeria can actually improve on these reform measures, right, let there be a lot of price stabilizer to ensure that subsidies do not rematch. What that means is let us be able to calculate what the fuel price be. Let it be predictable, right? So that there has to be that explanation that subsidies may not be able to come back, and the reason is because it's quite expensive and it's quite unreasonable at these levels.
Yeah.
Nigeria's net reserve is quite low. We cannot keep affording to pay high subsidies that exceeds even our revenues. So we think if these measures are put in place, as long as high interest rates to stem the growth in money supply, we think that we will probably be getting there gradually.
All right, I guess all eyes on the CBN next week. We should be getting that decision and the rate setting meeting. Thank you so much for coming on, Ibuku Omoyeni, Sub-Saharan African economist at Vetiva Research. Thank you.
Thank you for having me.
All right, let's take it on to our stories now. See, the World Bank has warned that Kenya might lose up to 7.25% of its economic output for 2050 if it does not take decisive steps to adapt to climate change and lessen its effects. On the so-called frontier economies, the East African nation has been suffering from effects of global heating, including prolonged droughts in recent years. And the Ghanaian government has set a target of 2.8% in GDP growth in 2024. The Ghanaian finance minister made this projection while presenting the annual budget for the 2024 fiscal year to the Legislative House, adding that the economy has been responding to reforms started in May. And they expect that overall real GDP will expand by at least 2.8% and an end period inflation rate of about 15.0%. And that's it on Business Incorporated today. Thank you so much for watching. I'm Ladi Williams. I'll catch you again next week. Bye for now.